Today's spotlight is the 2013 silver Libertad. We are also going to talk about the ongoing silver and gold correction that started on October 17th, and I'll give you some of the reasons why this is not a bubble. Stay tuned.
Ladies and gentlemen, your host, Titty Hunter!
From late August until October 17th, gold and silver, and even the ETFs and the gold and silver miners went on a seemingly relentless run, minimal correction, huge rallies all the way to October 17th. And since the morning of October the 17th, both asset classes have been in a correction mode. And everyone is wondering, how long is it going to last and what's causing this correction? I don't have all the answers, unfortunately. Everyone has to do their own due diligence, consult a professional, but I'll give my 2 cents. The first thing everyone needs to be aware of, that even in a bull market, you are going to have corrections. If we assume this is truly a secular bull market, even in bull markets, if you look historically, there has to be shakeouts. There has to be corrections. And this chart is from Northstar. I have mentioned him before on this channel, and I pulled up one of his recent charts from his X/Twitter. And essentially what you're seeing here is the gold and silver monthly price, monthly candlestick chart. And the main thing that sticks out, the solid green lines are moving averages. And specifically here, he's plotting this 36-month moving average. And what you see is both gold and silver really have deviated substantially on the upside from that moving average. And since we have always seen in history that even in bull markets, there must be corrections, given that extension from that moving average, it's no surprise that we are in fact now seeing a correction. While I certainly can't predict how long this correction is going to last, I can highlight 2 elements which I believe are driving the crowd in the short term, given that it is Q4 of 2025, and also certainly another factor that's going to come into play early in 2026. First is the simplest factor. Let's talk about, before we go into a wash sale, what you're seeing on the screen. But the simplest one to explain is taking profits. You probably have a bunch of investors / traders / speculators, and they made huge gains in gold and silver, underlying ETFs and gold and silver miners in 2025. And what they're doing is they don't want to show those gains, realize those gains now in 2025 and have to pay capital gains tax on them, but they're perhaps holding off till the beginning of 2026 to then show the gain in 2026, and they could hold off paying their tax obligations in the following year. So holding off on realizing gains until 2026 could definitely be a headwind for gold, silver, and the miners. So that suggestive that we could see a lot of volatility and corrections through the beginning of 2026. The second element from the retail crowd that's really going to influence prices of gold, silver, and the miners here in the fourth quarter is what is known as the wash sale rule. And essentially, before I speak about what the wash sale rule is, I just want to highlight again, looking at Northstar's chart, how gold and silver, in particularly from late August through October 17th, the prices really started to accelerate. Very steep slope, very steep rises. That attracts the YOLO / FOMO crowd. YOLO, you only live once. FOMO, fear of missing out. And that type of crowd starts to get very leveraged. They take on margin. Margin is when you borrow against your account to buy more stock on leverage. And so you need to always have a certain amount of equity to support that margin. And when you don't have enough, you're forced to sell. The other way folks leverage is buying options. And in the case of the prices rallying, you'll start getting a lot of speculation in terms of call options. And so given that there was an attraction to that price surge and folks taking on leverage, it's fruitful to talk about what the wash sale rule is. Because we are in Q4 of 2025, it's important because wash sale rule essentially influences the conditions under which you can write off a loss. And basically, showing you here on the screen, A wash sale is a transaction in which an investor sells or trades a security at a loss and purchases a substantially similar one 30 days before or after the sale. But let's break that into pieces. Let's break apart the wash sale into two components. Let's concentrate on the after the sale component. So let's say you have an investor, and I'll kind of sketch it up shortly. Let's say you have an investor, they decided to leverage up and buy, 10, 25, or 50 call options on a silver or gold or even minor ETF. And, these are very leveraged plays, very volatile. You could essentially gain a lot in short order, but you could lose it all in very short amount of time. And so what the wash sale rule essentially says, if let's say those options all expire worthless, so let's assume they cost you like $2,000 just to keep it simple. What the rule is saying is you cannot write that off as a loss for the year if you end up buying a similar security within 30 days after that sale. So it essentially constrains you. Hey, if you want to write off this loss for the year, you have to wait a full 30 days and not buy back that security or similar security, substantially similar, within the 30 days after, or else you just can't write it off. So that's the part of after the sale. What really complicates matters is this 30 days before condition. And that really complicates matters because, let's say you buy the actual ETF or a miner's shares per se. You get attracted to the sector and you could say, I'm going to buy shares. But quickly you see the price is surging. If you have fear of missing out, and suddenly you get into options and you lose your shirt on the options. You lose $2,000. But now it gets a little more complicated. If in the days leading up to you purchasing those options, you happen to buy like the underlying ETF and buy shares, well, now that loss, you cannot, if it happened within a 30-day window before, you cannot write off the loss on the options until you sell those originally shares that if you bought within 30 days before getting in on the options. So let's illustrate that. I wanted to show a quick illustration of the wash sale rule. EXK is a silver mining stock that I follow and I own. And I just want to give an example of call options, which are very volatile, high risk, high reward, but very high risk. And let's say somebody got caught up in the FOMO, and a week before the 17th, someone decides, I'm going to buy $10 strike call options. They're basically saying, I want the price of EXK, the underlying price, to be greater than $10 by expiration so I can make some money. But on 10/17, when they expired, they actually the stock price of EXK closed under $10. It made these call options worthless. It's a loss of $2,000. And what the wash sale rule says, essentially, if you want to write off this $2,000 on your P&L for the year, you cannot buy back into either EXK options or even EXK, the stock, within 30 days, or else it's not, you cannot write it off. So if today was the 27th and let's say 10/27/25, you go and you buy, 100 shares, or you buy some other call options. Well, it's saying, sorry, this $2,000, you can no longer write this off. This is no longer write-off because you purchased. You have to wait till essentially, it's calendar days, it's not business days, 30 calendar days. We have to wait, in this particular instance, until 30 days later to be able to buy back in, whether we want to get into call options or just the underlying shares. You have to wait a full 30 calendar days before you could buy in, or else this loss cannot be written off. Now, this is the other part of the wash sale rule that's really interesting, and it's the part that can drive additional selling pressure. I'm keeping it to the same example, a scenario where someone purchased those $10 strike call options that expired on the 17th, the morning where silver, gold, and the miners peaked. But where I'm making it more interesting, let's say it was someone who got interested in the sector and decided, on October 1st, they were going to buy 1,000 shares of EXK. And so approximately it was about $7,800 to make that purchase. Well, what happens on that second condition I talked about with the wash sale rule? Hey, you had a $2,000 loss on those options. But look, you purchased a very similar to instrument, which is the shares of the same underlying stock, less than 30 days before. And so because that happened, you cannot write off this $2,000 loss. In order to be able to write it off, you have to sell from this position in order for you to enable you to write that off. So the wash sale rule is showing that this is going to drive. On the first part of it, we showed that you have to wait a full 30 days, so that stops buying pressure. But that preceding 30-day window, that can drive additional selling pressure, like you're seeing in this situation, where now you have to sell the shares as well because I really want to write off my $2,000 loss. I wanted to highlight just another element as why it doesn't look like a bubble to me in the weeks leading up to October 17th. And since October 17th, a lot of folks on social media, whether it be on Twitter, Reddit, everywhere else, you had folks coming out of the woodwork saying, oh, it's a bubble. Gold and silver is a bubble. And look, it's dropping. And I told you so. And when I first started investing in 2004, the preferred equivalent of like the social media at the time was the Yahoo Finance message boards. And that was kind of where you went for a specific stock or group of stocks, and you'd go into those message board forums. And that was kind of your thermometer per se of how crowded a stock was in terms of being a bubble or not being a bubble. And so what I've noticed, the equivalent of today's world, especially in the last several years, has been on Reddit, has been Wall Street Bets. And Wall Street Bets has very close to 3 million members that are that have joined this subreddit. And the one thing I can tell you about Wall Street Bets, out of 100 posts on here, you maybe see 1 or 2 about the gold and silver sector. You're essentially considered a pariah if you're posting about that sector in here. And so what are the other 98 about? The grand majority are all about AI and chip stocks. And the last week or so, this Beyond Meat stock that rallied substantially, and folks were going full tilt, YOLO, FOMO, buying short-term call options. A lot of people lost their shirt. But really, the overwhelming majority is all AI and chip stocks. Very little or no concern for gold or silver. You're getting downvoted in here if you're talking about gold and silver. So the fact that you have such a giant platform where you have several million investors and they're very heavily leveraged. So these people were not leveraged at all in gold, silver, or the miners. So from that fact alone, I can infer we are not in a bubble. Something we've looked at on prior videos on this channel is essentially looking at the daily volume profile of SLV to kind of compare current state here in 2025. And particularly, we'll focus in right here on October 17th, which was the short-term price peak. And we're going to compare it to 2011, where 2011 we took a huge tumble, and we looked at this before. So 2011, pretty much the high came on April 28th, 2011. And on that day, this was kind of the high, 48.35 was the high. And you had 180 million shares traded. And then what is also interesting is the subsequent days after that. You had share volumes, daily share volumes in over 100 million, almost reaching 300 million on May 5th. So that was the last time we were around that territory, price territory. And now looking at 2025, and everyone said, oh, October 17th, it's a bubble, it's a peak, it's going to crash, it's going to tumble 30, 40, 50%. But look at the daily volume. We're not even reaching 100 million on any of these days. So the fact that the market has a capacity for 300 million and for the price to really tank, the fact that we're not seeing that equivalent type of volume today and the price dropping indicates to me that it is not a crowd, it is not an institutional stampede for the exits. or else we would have to see this volume. Let's talk titties. So today's spotlight piece is the 2013 MS 1 ounce silver Libertad. And so 2013 is very interesting. And I say that because when we look at the data, we'll see shortly the population reports, the number of graded coins on Libertads really surged on this year. And what I know now in retrospect and what I observed at the market, this was the year where really a whole lot of new players got involved with Libertads in terms of distributing them, grading them, and reselling them after grading them. Because prior to this, it was really just not that many players out there. There was AppMex, there was Kitco. There wasn't a lot of the variety you see today. They existed back then, but they really weren't grading. For example, that label you're seeing right now on the screen, I believe this one belonged to a Paradise Mint. And prior to around this year, I wasn't really seeing much on the internet in terms of Paradise Mint. I had felt like at the time, AppMex was like the dominant leader. And I felt like somewhere around here, others started to get involved and chip away as what I perceived as them having a very dominant market share. I don't know the actual data behind it, but that was my perception, that a lot more players got involved, and the data supports it. The number of graded coins, particularly for silver Libertads, really surged. And so there was a lot more choice out in the market. And because a lot more dealers get involved, they get their own exclusive labels for different countries. And that just attracted more demand. Folks wanted, hey, I like this label I'm seeing here. This one is from Paradise Mint, if I'm not mistaken. And so if someone says, hey, I really love that label, it's better than the regular label, I'd like to buy that. So while the population numbers are really going to be a drastic change, the mintage really hasn't been much of a change from the 2012. 2012, we were just under 750,000 mintage, and 2013, we're closer to 775,000 in mintage. And we kind of rank right around the middle of the board in terms of scarcity by years for the 1 ounce silver Libertads. Let's take a look at the population reports at NGC and PCGS. So what you'll notice here for the 2013 silver Libertad is you have over 4,000 graded, 4,067. And you really haven't seen that number of graded, that type of magnitude, since the 1985 entry. And I mean, 1985 is such a high number graded because you have a lot of dealers that have doing bulk submissions over the years, last several years. In addition, it's number 1 or 2 in terms of the highest mintage Libertads, depending on your perspective of what's been melted over the years. And so 2013 onward is when you really have this mass grading effect, where a lot of players got involved, started grading Libertads, and that results in an abundance of a whole lot of MS70. So from 2013 onward, it's not that hard, and the premium from an MS69 to an MS70 is not as drastic as some older years that have a lower graded populations. And as you see, that trend kind of is sustained. You see in the 2014 right here, 2014 almost reached 5,000. There's another trend and even some speculation by collectors in terms of what is happening in the Libertad market, especially because so many coins are being submitted, in particular by dealers, to get graded. And that is because, when you're a dealer and you're submitting thousands of coins to get graded, you are kind of a VIP for a grading company. They see you as a recurring revenue stream that's going to be loyal to them and keep sending them coins. And there's always competition between NGC and PCGS. And one of the things a lot of us collectors have noticed, a lot of times there's coins out there, especially these modern years, starting in 2013 more so than prior years. Because I would say we talked about grading inflation before, but if the impact I'm talking about here, it's almost as if there's a quid pro quo, as if like, hey, we are the big dealers, we're going to submit these thousands of silver Libertads, and I want you to guarantee me in return that we're going to get at least a huge chunk of MS70s. And it's not as pronounced here in the 2013, but as we get closer to the newer years in the 2020s, you'll see that there's so many more MS70s, and a lot of us collectors have seen some graded MS70s that are just an embarrassment to the grade because they are not 70s. Just look at it, the number of imperfections that are very visible to the naked eye, not even under magnification. So anyone who is a collector, and in particular more of these 2013 and onward silver Libertads, when a new collector shows up and asks one of us, should I buy this MS70? Is this a good price? One of the things to look out is to actually look at the coin. Because of what I just talked about, you can have a coin with a whole lot of milk spots. You can have some hairline scratches. You could have some dents, and it's somehow still got an MS70. And even though it is an MS70, but very visibly one can see it is not, the fact that it's visible to the naked eye does take away from the value, and you as a new collector should not pay the going rate, the sold comp rate for that coin. So I know I went on a bit of a tangent there, but I hope that's very helpful to you new collectors. And given that, let's look at the PCGS side, where on the PCGS side, that phenomena of the increased graded numbers hasn't really started to take effect in 2013. That was seen more on the NGC side. Here on PCGS, you just saw that 2013, only 702 graded. Top Pop also the MS70. Here's my old Reddit post on the 2013 Silver Libertad, where I kind of grabbed snapshot counts of what the total graded population at NGC was from when I first started seriously collecting the Silver Libertads in 2021. As you can see already in 2021, there was a whole lot of them graded. There was 3,681 in 2021. Around mid-2023, there was around 792. This was posted 7 months ago. 7 months ago, there was 3,921. And now today, from 7 months ago to today, now we are at 4,067. So the count was already high because of the effect that in 2013, a lot of these dealers started submitting coins to NGC to get graded. Let's take a look at some eBay sold comps. And as you may have noticed already, that 2013 is not a key date by any means, and so we should not anticipate any sizable prices, nothing near 100 or above 100 for this year in particular. And so we have an October 27th sold comp of 58, October 26th, 74. 74 really does seem on the high side. I'll show you why shortly. October 26th, another 57. And October 26th, this is what I want to highlight. I've talked about this many times on this channel. It is a 2013 MS69 graded. It sold for $84.95. Why is that interesting? Because up here you had folks paying $58, $74. When you're getting a coin graded at this point in the modern classification, you're not paying for like expedited service. You're paying $20 just to get the coin graded. First, you got to pay the membership fee to either NGC or PCGS, an annual membership fee. Then you have to pay $20 to get it graded. If you want any of the special labels, like the one you see in this coin, that costs extra money. That's almost $10 on top. And then you factor in the shipping to the grading company, and then you're also on the hook for paying the shipping back. This is one of those instances where you have to start considering, hey, what is the price of the graded coin? What is the price of the raw coin? Is it worth it for me just to buy a graded? Do the numbers check out? And in this instance, it really does look like it is the better deal to just buy the graded coin. Thanks for watching this video. If you have any questions, you could leave them here in the comments. You can even reach out to me on Reddit, on Facebook, or on Instagram, and I could help you. If you're starting out on your coin journey with Libertads, I'll be glad to answer any questions and help you get the best deals possible. Make sure no one's trying to rip you off. Thanks for watching.